Sarah Larby, producer and host of Everyday Investor. We have a great show today, but I want to first and foremost thank you for tuning in and showing up and getting the education, because it's important that we get the right education to make the right moves so that we can leave our 9-to-5 jobs, create that freedom, and make money from our money. So that is what the show is about. We have two great guests today talking about the short-term rental strategy, Ashley and Spencer, and they've been able to travel around the world while still maintaining and managing their portfolio here in Canada. They also have a few properties in the US. So do you want to know how to do that and make money in short-term rentals? Don't go anywhere. We're going to talk about that today.
So short-term rentals means anything under 28 days. Typically our rentals go for about a week or so at the max, but they charge higher prices, so our cash flow is usually much better.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Sarah. Welcome back to Everyday Investor. Today we are speaking to Spencer and Ashley about making money in short-term rentals. But before we do that and speak to them and learn from them, let's go and see what's new in the world of stocks.
Omar Khan here, guys, with Data Trading. Now let's look at the year review. 2021 was a good year for the markets, but what propelled the markets were largely, not largely, but to a good extent, energy, oil and gas companies, banks, and some of your larger cap technology companies. Now, will this continue into 2022? Let's see. Oil and gas looks like it's something that's not going to be used as much going forward. Obviously, we can see it clearly that the world is moving to electric vehicles. So that's something we're going to keep note of. Also, on the technology side, will we continue to advance technology-wise? I think that's going to be clearly evident coming up soon. Now, there's something called the January effect. The January effect is how the markets do in January typically indicate how they do for 2022. So 2021 was a good year. Typically, the year after the first presidential year in the US, that's this year, 2022, the second year, markets don't do as well as they do in the first year. Let's see if that holds true. But we're going to look at the January effect to see what the markets hold for 2022. Again, it's not 100%. But our job is to tilt odds and probabilities in our favor. See you guys next week. Take care.
Spencer, Ashley, welcome to the show. How are you?
We're awesome. Thanks for having us.
Yeah, thank you.
Awesome. So I'm excited. I love short-term rentals, mid-term rentals, all of that creative rental strategy. Give us a little bit of an overview, though, of how you got started investing in short-term rentals.
Sure. So about 10 years ago, I actually purchased my first personal home, and I rented out the top 3 bedrooms to students. I really didn't know what I was doing at the time, but I knew I didn't want to live at home. I was about 22 at the time.
And then I got my first property in 2018 with a partner, and that was actually our first short-term rental. And from there, that did so well. We continued to purchase more of those, and we haven't looked back since.
Very cool. I love short-term rentals. I like a lot of the control and the ability to have that better cash flow. But before we get into all that good stuff, what does short-term mean when we're saying short-term rental?
So short-term rentals means anything under 28 days. Typically our rentals go for about a week or so at the max, but they charge higher prices. So our cash flow is usually much better.
And you're currently managing a portfolio of your own and other investors' short-term rental properties. Can you give us an overview of what that looks like?
Yeah, so our portfolio, we own 6 single-family homes that are all short-term rentals. We have 2 just buildings that are more long-term, and then we manage 22 other investors' properties. That ranges from mostly Niagara, but we've got Hamilton, Squamish, BC, and just a few surrounding areas, and 2 in Ellicottville, just across the border.
So Obviously, short-term rentals is, you mentioned the cash flow as well. There's some pros and cons, but let's just take a step back for a second and figure out, what makes a good short-term rental property. Maybe give us some insight on that. If somebody is interested in getting better cash flow, renting on the short-term market, how do we find these properties? And then let's go from there.
So location is definitely going to be something really big. We use AirDNA a lot, which is an online platform, and you can type in a property address, the number of beds and baths it has, and you're able to see roughly how much it would make as a short-term rental. And then just honestly, just being unique and Instagrammable, making that property really stand out and pop, because there are a lot of Airbnbs and short-term rentals. It's kind of become a big thing in the last few years. So we always tell people, have something unique on property that's going to draw people in.
So if somebody does want to set up an Airbnb, I mean, they're buying a piece of property, they're saying, okay, this is a great, location. I think it could bring in some different, people, because there's certain elements nearby. Maybe there's a cool town, some cool things to do in the area. How do you set up an Airbnb or a short-term rental that's going to be different from just, a long-term type of property?
Anything Instagrammable and anything that will help your low season booking. So that's two things. So for one, we added a feature wall in one of our homes and added a nice neon sign so people can take pictures, post on their social media. You can create little backyard oases, especially during the pandemic. People want to work from home and have a nice backyard secluded just for their group. We're adding saunas in a lot of our property to get in some of those low season bookings, and it just adds another element onto the search bar of Airbnb, because there's not a lot of saunas in the areas that we're in. So little things like that, making sure your home is designed and fits a theme. So if you're by a beach, make it a full beach theme and have nice beach decor, and that photographs really, really well.
All right, so some really cool Instagrammable options, some things that make it different. What about just the setup? I mean, I'm thinking of all the furniture and all of those different things that probably cost some money that people may need to factor in as they're figuring out, okay, should I do a long-term rental on this one, or is the Airbnb short-term rental strategy better?
Yeah, so there is quite a bit of capital that goes into furnishing. So when we're looking at a property, we look at heads to beds. So how can we maximize people? To an extent, it needs to be a comfortable stay for the group, but putting things in pull-out couches or sofa beds where you can sleep another one or two people to an extent. You don't want to put a ton of bunk beds in everywhere and it turns into a frat house, because that brings a whole nother slew of issues, but definitely looking for that. That's number one. The rest of it, you want it to have open feel. We like the higher end stuff because we find that attracts better tenants. So making sure that if you are renovating, you're putting in the higher end kitchens and bathrooms and making that living space very inviting. And that goes with the outdoor space as well. That's super important.
Okay, so instead of basic, just renovate to rent long term in, a B or C market, you're really trying to take that to the next level in terms of creating that experience a little bit more higher end than you would in a normal rental if you're renovating for the long term. So that's cool. I mean, I have 5 Airbnbs or 5 short-term, mid-term rentals myself. And some of the things that I've done, in addition to having to account for the furniture, but, just having a storage closet, having a camera, what are some of the other things that maybe somebody that's not in this market may not realize that they might want to do for that first short-term rental?
Well, you named a few of them. We definitely have exterior cameras on all of our homes. We have noise sensors. We use Noise Aware, and we like to use noise sensors. They only measure decibel levels, but they can really combat against parties or excessive noise, which really helps with neighbor relations, which is extremely important with short-term rentals. Definitely supply closets for cleaners, like you mentioned, that are locked. And you always need way more supplies than what people understand that they think they need. So we say at least 4 sets of everything per bed, per person. For towels, you need a ton of, say, all the consumables. So coffee, toilet paper, paper towel, all of that stuff. So we find a lot of investors renovate properties, they look great and modern, and then they kind of cheap out on the furnishings and then they wonder why their beautiful home isn't renting properly. You can't cheap out on the furnishings. You really have to go all in with that too.
Awesome. So let's just say a typical 3-bedroom home, 1.5 bathroom. Like, what is an average that you're spending to set it up after the renovations?
3-bedroom, 1.5 bath, 2 bath. You're probably looking at, a minimum 12 to 13,000, and that's like bare bones. That's just the inside. If you want to take it to the next level and really get top dollar, you're probably looking close to 20 or 30 if you're going on the higher end with the outdoor amenities. And you know that again. You can do a lot more than that as well.
And that doesn't include the saunas or the hot tubs or different things to boost and increase the occupancy. So let's talk about the pros and cons. Every strategy has pros and cons, has, the good, and it's important for us to also share some of the downsides. What are, let's just start with the cons first. Let's start with the downsides. What are maybe the risks or some potential things that are not as great where maybe a long-term rental works better?
So upfront costs are higher because you do have to furnish, supply, all of that stuff. Another thing are regulations and bylaws. At any point, a city could deem short-term rentals as illegal, and that can cause problems in terms of any type of licensing and all of that stuff.
And then obviously it's definitely a lot more hands-on. You are dealing with check-ins and check-outs 2 to 3 times a week. You can deal with some difficult guests. That's always a fun one. And once in a while you get the odd bad apple that comes through and causes a lot of stress and can do a little bit of damage to your property. Knock on wood, we haven't had too many brutal horror stories yet, but we've had some interesting things, to say the least.
Absolutely. And I think that's why Airbnb, a lot of us hosts choose them because they have a good insurance policy. I think it's $1 million. Of course, there's things that you need to know around it to be able to get it. For sure, you want to get your own good insurance. There are, like you said, it is more hands-on. You do have to have additional people, like really good cleaners, somebody that, you could trust to clean the hot tubs or, do all that stuff, because that's a whole job on its own, depending on how many you have. So there are going to be some downsides along the way. Like another one I can think of is obviously if you're in an area that's very, very seasonal, you're going to have to really be strategic on how you are managing the low season. Let's talk about some of the pros though. Like, what has it been able to do for you, and what are some pros that you say these are like my top 3 or my top 4 big reasons to invest in short term?
Cash flow would be the obvious number one. We make the majority of our cash flow between May and October, and it just far surpasses anything that could be made on a long-term rental. The home is being professionally cleaned, often at least once a week, usually sometimes twice or 3 times a week during our high season.
You're buying vacation properties, so they're usually in a very good area, and we're a big fan of buy and hold. So it's kind of nice as owners to be able to go and use these properties once in a while as well. That's definitely a pro. And like just the wear and tear generally on the house is typically a lot better. These people are dropping their bags off, actually, they're going to the beach, they're going to the falls, the wineries. They're really only coming back to maybe make a meal or two and lay their head on the bed at night. That's basically it. So there's definitely some positives there.
Awesome. So less wear and tear. I'm sure you have some ways to screen tenants and screen out potentially bad ones as well. One of the things I admire about what you're doing is you're not only doing it for yourself, but you're offering that service to others as well that may not want to do the hands-on piece and the additional management because you've got your system and processes already in line. But I think the cool thing is that you've been traveling for, I think, the last month and a half, and you guys are big travel people. Can you share how you've been able to run this business, just like 20 quick seconds before we go on break, on how that's been able to help you with your your passion, which is traveling?
Yeah, so it's a good business to be able to do online anywhere in the world. Once we're outside of, say, a 3-hour time window, we've actually started hiring it out. So we've recently brought on like a property manager, and she just takes on all of the properties, and it's a little more hands off for us, and we can go do what we love.
Yeah, teams are super important. Having systems in place, cleaners, maintenance, multiple of them is that's the key to success.
Absolutely. Building the right team, the people that you can trust, because if you're not going to be, you said you have some in New York or Ellicottville or where you can't access easily, having those right people, feet on the street, eyes nearby, I think is going to be critical. and having the right cleaners that can go above and beyond just regular cleaning, right? Like looking and making sure that everything in the storage room is up to date and you're not running low on any stock. That's super exciting, guys. When we do come back, I want to have you walk us through an actual deal that you've done. Let's go through the numbers and let's actually talk about the cash flow at that point in time. So folks at home, don't go anywhere. We will be right back.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
Welcome back. We are speaking with Ashley and Spencer about making money in the short-term rental market. But before we do that, what is new and what's happening in the world of mortgages? Kyle.
Thanks and happy 2022. As we progress into the new year, many of us are excited about growing, investing, and building our financial future. Though I share that excitement, at this time of year, I always like to start with going back to the basics. Before we talk about building the growth of our portfolio, we must solidify the foundation. What that means, if you're carrying any high interest credit card debt from the holidays, still stuck with that pesky student loan, maybe carrying a couple car payments, and the interest rate of your mortgage hasn't been reviewed in the last couple of years, I highly recommend booking in with myself and the team for a mortgage review. Before we talk about the growth of your portfolio, let's look at your current cash obligations, your current debt obligations, and see if there's an opportunity to restructure that debt to increase cash flow before we even make our first investment. Once we're making investments, that increased cash flow is going to free up more and more capital for investment opportunity in the future. These obligations, these reviews are no obligation, and we're excited to hear from you soon. Don't hesitate to reach out to myself and the Kyle Ford Mortgage team. Thanks. Back to you.
All right, so welcome back. We are going to be looking at one of the deals that you have been doing recently, a typical deal. Where is this property?
It is in the north end of St. Catharines.
All right, St. Catharines. And just curious, why St. Catharines?
So St. Catharines is neighboring to Niagara-on-the-Lake, which is a very popular vacation spot. But this St. Catharines pricing for homes is a lot less, but it's still like 10, 15 minutes from the best wineries. Okay.
All right. So you look at the wineries and you're like, people are going to come here. Your client base are going to be people that are doing the wine tours, that want a little break. Prior to the pandemic, when people were traveling, are you getting, is it mostly Canadians? Is it people from Ontario? Is it the US? Is it a little bit of everything? Who are the clients?
Yeah, so prior to the pandemic, we were getting a mix of, Canadians, a lot of Americans were coming over for the Niagara Falls and the wineries, and we did get the odd international person that would be coming through to visit Niagara as well. Obviously, with COVID, it was a lot more Canadians, but we're starting to see a lot more Americans and a few international people come back recently, which is nice.
All right, very cool. How much was this property in St. Catharines?
$393,000.
$393,000, which is the purchase price. And was this property on MLS, off MLS? How did you find it?
So this was on the MLS. So this was just a time where it wasn't as competitive. I think it was listed for like 410, and we got it down.
What year was this?
2019.
2019. Okay. 2019. And so you bought the property, and then what did you do with it?
So we did very little renovations. It was actually pretty well ready to go. We added one bathroom just because we know that more bathrooms is definitely beneficial. Then we also just did a touch up to the kitchen. So we actually redid the countertops. We added granite countertops in, and we painted the cabinets. They were like an older brown. We just spray painted them white and put nice hardware on it just to give it a more photographic touch.
All right, and how much did those small touches cost you?
So in total, the renovation itself was about $17,000, but then with furniture, we put in, I think, around $32,000 total. So
$32,000. And then what did you guys end up doing with it?
So we rented it out right away. because this was about in May. So we went live, I believe, for the end of May. And then we ended up refinancing it the top of Q4 of 2020.
So 2020, and what did you refinance it for?
491,000.
491,000. So you had the reno cost, you had $32,000 in total. You probably had some closing costs as well, though, like before your renos, right? You purchased,
Yes.
there's usually like legal costs and closing costs and that kind of stuff. What was that, the closing costs?
5,000.
So 5,000. So you've got the closing costs, the reno costs, you refinance at 491. How much money are you pulling out at that point in time?
But we get close to 80,000.
Okay.
Back.
So $80,000, and you're about $80,000 on closing costs, reno, and all that good stuff. So you've essentially paid back your initial, actually I should say your down payment, which would have been $78,000. And then you have left your reno and your closing costs. So how much money do you have left in the deal?
So we had about 37,000 left in the deal.
Okay. Because you pulled out essentially 80% loan to value on the new refinance minus what you owe on your current mortgage, which is about 80 grand. And that's essentially the same thing as your down payment, which is about 80 grand, which would be, or 78,000, which would be 393 times 0.8. That's your mortgage. So the 20% there is about 78. So you're paying back your down payment essentially, and you're left with $36,000 of your money still in there. And what does the cash flow look like?
So our annual cash flow is about 38,000, 38,200 to be exact.
Okay.
It grosses about 76,000 last year.
How much?
About 76,000 last year. So the net cash flow worked out to 38,200.
So $38,000 in your pocket, net per year as an average. So this is your gross. Obviously, you've got expenses, your gross income minus your expenses. So you have $38,000 of cash flow, and you've got some appreciation, a little bit of mortgage pay down as well. What does that, here, I'm gonna probably write over here. Let's do mortgage pay down. What does that look like?
So that was 5,000 for the mortgage pay down.
All right, mortgage. And that's paid down by your Airbnb guests.
Correct.
Absolutely.
And then what's the appreciation roughly year over year?
So we've seen about a 5% annual in that area.
Okay, so 5% increase. So if we take all of your, your profits, which would be your cash flow, plus the appreciation of 5% a year, plus the mortgage pay down, and we look at how much money you've put into it or you still have left, what is your return on your investment?
So this one was really good. It works out to 183% after the refinance and the cash flow per year.
Okay, so 183% return on investment, something you bought in 2019, refinance, paid your down payment back, have about 36 grand of your own money left, but you're making more in cash flow. And so, that plus the mortgage being paid down by the Airbnb tenants, plus the appreciation, that's a pretty good return. You can't get that in the stock market.
Not bad.
That's why we love short-term rentals.
So let's talk about cash flow here for a second, because I think this is important. Every area is going to be a little bit different. But how do you analyze the cash flow on something? Let's just take this property as an example. Are there slower periods of time? Is there a high season? Are you averaging or estimating a certain occupancy amount when you're analyzing? How are you doing that?
So yeah, we use AirDNA. We find that it's actually quite accurate. So it is very seasonal. We know that. So we look at it from an annual perspective. Obviously, in our area, you're looking at May to September, October as your high season. You're going to make probably about 70 to 80% of your yearly income during those times. And then in the slower season, you're going to get bookings on, say, just the weekends and at a much smaller amount. So when we're looking at certain properties. We use AirDNA that pulls comparables from other properties that are already on short-term rentals. And as long as we can get it similar, if not better, we know we're pretty comfortable it's going to fall into that income category. So we can work backwards from there.
And also, I know that you love the whole midterm rentals, and we do something similar. And the low season, we kind of pivot and try and take on more longer term bookings. And that includes changing up the listing photo, changing up the description, saying this is great for working from home, long-term rentals. We get a lot of essential workers that come down to the canal, the hospitals, and then we're able to rent that out monthly during the lower season.
Okay, so you might not get as much cash flow in low season, but you're at least covering the costs and the expenses, and likely you're going to have a little bit less expenses because you're not having to have the cleaners as often. You're not replacing, the hand soap and the toilet paper, because a midterm tenant isn't going to call you and say, hey, I'm out of toilet paper. They're going to go and get their own to replace their own. I love the midterm strategy. Definitely talk to your accountant, but it's kind of that fine line between not having to worry too much about the HST piece once you're past the 28 days. But definitely talk to your accountant about that. So from a cash flow standpoint, is this typical, this $38,000 in St. Catharines? Is that, looking at your other properties, is that somewhere similar to your other ones?
Yeah, because we purchased 3 of them in and around the same time. It's still very lucrative right now. It's just obviously prices have gone up probably about 200,000. So that similar house now, if we sold it, we'd probably be getting close to 650,000. Right, which it still works when you run the numbers, but it's definitely a little bit tighter.
What are some options for potentially even increasing this cash flow or making sure that you increase your occupancy? I know you mentioned the sauna, but are there other tips and insights that you can share on why somebody might book your place before somebody else's?
Yeah, we love getting professional photos done. We know other listings only use, say, iPhone photos, but we really see the value in having a professional go in, staging the property. So you really set the tone, and someone who's looking at your property can see and envision themselves in their group using the facilities or whatever that you have at that home is big. Optimizing your listing. So making sure all of the pictures on the listing have captions, and those captions are very descriptive, like stay in our beautiful king bed with a big window looking out at the lake, really set the tone there. And then making sure you have, say, even baby toys, making sure it's accessible, going through the listing and kind of checking off all those boxes.
And yeah, just to add a few, the order of the photos is extremely important. You only have maybe 5 seconds to capture someone's attention. So a trick we like to use is to put our top 5 selling photos, we call it, because that's usually what pops up on the profile. So we want to have the most inviting, most photographic, Instagrammable photos there to grab people's attention and so they can keep it scrolling. Yeah, and then pricing, obviously, going in and updating that every single day. Airbnb loves seeing that. I swear by it that there's times where I haven't done it in a few days. I will go in and update the price, and within an hour, we have a booking at that place. So it's happened multiple times. It definitely is something we suggest doing.
That's funny that you mentioned that, because I've started finding that out, even if it's just a couple dollars, maybe it boosts it back up or something along those lines. But there is an algorithm that they have, and nobody really understands exactly what it is. We have some ideas, but keeping on track. And I think one of the things that we had talked about in the past is you guys also change the picture. If it's winter, you'll put some winter pictures. If it's fall, you'll put some fall pictures, so that you're setting the tone for those bookings. Honestly, guys, congratulations. It is amazing to see that you can do this business, and you've been able to do it while traveling and enjoying your lives at such a young age. So congratulations. I really appreciate you sharing the insights with us today.
Thank you.
Thanks, Sarah.
Appreciate it.
And thank you at home for tuning in. Without you, we wouldn't have a show. And I hope that you enjoyed watching how you can make some money going through the short-term rental strategy instead of a regular long-term. So always keep in mind, what is the highest and best use for what you are buying? In this case, short-term rental might be the answer. Thanks for tuning in.